Good morning, friends. Welcome back to the State of the Market Live. Today is the 19th episode, and it is 30th June 2022, the last day of the month, and also today is expiry, the monthly expiry of Nifty and BankNiftyfutures. Let us see what has happened yesterday. We'll take a recap of what happened in Nifty and BankNifty. And then we will jump into how to deal with the day today. Yesterday, the market gapped down slightly in both Nifty and Bank Nifty. And you see that we gapped down, but players did not find any momentum on the downside. So they tried to push it down in the first 50 minutes. However, they could not get any leeway on the downside. So as a result, the market was pushed back into the previous day's range. However, at the high of that previous day range, at the PDH, basically, again, the market was shunted as the fag end came. And you see that there was a kind of nice volatility. So it was not a one-way move, or it was not a trend day. You see that these days the market structure has continuously changed. Either we'll have a gap up or a gap down, and then we'll have a lot of volatility intermittently, and then the market is doing something that the players are not able to estimate. So it has been the trend since many weeks. Basically, if you zoom out and see what is happening since the large gap down of few weeks ago, you see that since 13th of June, this has been the trend. You see, most of the days, the trend is not clearly visible for most of the players. However, you have seen that in my Telegram channel, I have been posting levels where the market can go accurately. Initially, I estimated that we should not break 15,522, and that is what the market did on 16th expiry, and then it stayed in a range, then it shifted the range. Now again, it has shifted the range. Now, what are the possibilities today? What all can happen today? Today is quarter end rebalancing in the US. Before we open in the US markets, today, the players are going to make their mark in India today. So what can happen is we may look at this entire range as the probable range because of expiry. So any move below this level is going to impact the market first. That means any move below 670 is going to bring down a lot of significant players into trouble because they are holding a lot of inventory at these levels. These are the levels where they have acquired inventory, and this is the level where they acquired inventory. So any move like this is going to shift these players into action. They are going to play with their hedges and adjust their portfolios at these levels on a monthly level. Similarly, if we break into this zone, again, they will take some more action, and any move below this level around 15,217, around 15,217 is going to bring any pain. So this is the worst case scenario I am seeing today. So mostly today we can have a kind of balancing range in this area. Let's again redraw the zone. What can happen today? So today I'm expecting the market to mostly trade in this zone. This is my first zone where I will be focusing on, because the market is indicating a gap down in SGX. Now, below this level, this is going to be my zone 2. Now, you might be wondering what happens to the upside. So, this is going to be my zone 3. So, I'm expecting this particular area to be broken for any upside. So what are the levels that we have to look for in upside? So we need to see if the market breaks this particular key level on the upside first. We need to break 15,871. This is a volume moving average. So, and this nicely depicts how the volume is impacting players. So any move above 15,871 should bring you onto the long side. Similarly, any move above 15,946 should bring action on the long side. So I am attaching a lower possibility for zone 3. I am attaching a lower probability for zone 3. Remember this, it does not mean that I don't want to trade this level. I will trade this level only when the market decides to go up. If it decides to remain rangy, I will look for this particular range. This is one range and this is second. This entire thing is zone 1. So this is going to be the place of our action today. Any move below this is going to again rethink my strategy. I'll rethink my strategy if the market goes to this level or to this level. But here I am prepared for very well. I know what to do here, what kind of trades to find here, and what kind of expectations that I should keep with the market. Only if the market goes up or down below these levels, I am going to reply to the market accordingly. Or I mean to say respond. Sorry about that. Now let's see what is happening in Bank Nifty. In Bank Nifty as well, we have a similar situation. So we need to break 33,874. This is going to be my first value I will look for on the upside. So any upside above this level should be tracked for longs. And this is going to be my zone of action throughout the day. So I will expect the base case to be in this level. This is going to be my zone 1. And there is a lower probability of this happening. So I will look for any fall below this one. So this is going to be my zone 2. So I will see if the market tries to break on the downside as SGX is indicating. However, if it gives a head fake, and if it cheats me and goes up to the upside, I look for a break of 33,874 again to do what? Let's see what it can do on the upside. If the market trends to go above 33,874, I will look for this zone as my action level. So probably we can consider this as well. So this is the level which we can even hope for. However, we may not go that far. This is going to be the zone where I will be very focused on the upside. So any move above 33,874 should only make you think about longs. Otherwise, just keep quiet and play the range which is in zone 1 or which is in zone 2. Now, let's see what is happening in Reliance. Yesterday, there was a lot of action in Reliance, and you saw how the market was pushed about 2520 towards higher levels. So basically, in Reliance, we are trying to recoup that range. We have made a nice range from 2661 to 2440, and now we are above the 50% retracement of that level. Let's see what I mean by that. So basically, if you see, you are above the 50% retracement. So any move below 2560 will only need to be looked for shorts. So today, any open below 2550 should be looked for shorts below this zone. So I'll be again aiming for 2420 levels on the downside. However, if it stays above this 2558 and breaks 2628, I am looking for a close of this gap. But I presume the market will look for the upside only in the new expiry level. That means only in June series, I expect Reliance to go above 26.28. If it goes above 26.28, this is the entire zone it will cover. So it needs to go like this for covering this entire gap zone as well as the zone where the scene of crime happened after the gap. Until then, today we can expect a move like this, because after a trend day, generally the market ranges in a while, and if it falls at open with a gap down, I am going to look for a move like this or a continuation like this towards 24.20. This is one pending zone where the business has remained unfinished, and if there is a deep cut, we can see 24.20 levels also, maybe not in a day but over the next few days. However, my base case in Reliance is a range move here, and then tomorrow in new expiry it can go above 26.28 and fill towards 27.20 zone. Let's see what is happening in HDFC now. In HDFC, we see that again the market has ranged a lot. However, in HDFC and HDFC Bank, we do not have any gap zones to fill. So mostly HDFC and HDFC Bank are going to remain in a range over the next few days in this particular range. So they're going to remain in a broad range of 2133 to 2260. This can be the broad range. So any shorts, if you want to look for in HDFC, should be below 2132 or above 2264 if you want to look for any trends. Otherwise, you have to look for zone above this gap. So any move above this level should be only for longs, and any move below this 2134 should be only for shorts. Let's see what is happening in HDFC Bank. Again, the structure we are seeing in HDFC Bank, both are kind of filling those gaps that were made earlier and kind of moving around this moving average. So any move below 1328 needs to be looked for shorts. However, my base case is that these two stocks will move within a range for a lengthy period of time, because they are being managed or they are being used to manage the indices within short ranges. As we can see, Nifty is being managed within a short range. And this is happening because of HDFC and HDFC Bank. You see that most of the stocks like Reliance are moving a lot here and there with trend moves, but HDFC and HDFC Bank have all but remained lull, and they may continue to do so today as well. Only in the new expiry, we can expect some kind of up move or down move in those two stocks. That's all for today, guys. Have a great day. Have a great trading day. Please subscribe to my channel and also share the link among your friends. Have a great day. Bye-bye.